Appreciate it. Well, welcome again, everybody, and good morning. This is Joe Radola. I'm the financing consultant for the SBDC Shasta-Cascade office up in Redding, California. Windy, Redding, California this morning. As David mentioned, you will be getting a link to the presentation. We are taping this morning. It'll be added to our YouTube channel as well. You'll be getting copies of the slides and copies of 2 of the documents that we're going to refer to today so that you can use them and see them at home or at your office. Again, this is tax planning and preparation for sole proprietors. This is really a class that is set up for the mom and pop sole proprietor. Many of us are that way. I know I have a little side gig, as we call it, that is a at home, out of my second bedroom, small business, okay? And you still got to do things according to the way the IRS likes it done, right? Because we don't want them breathing down our throats. So today you're gonna be able to see how, for a sole proprietor, money comes in, you track it, you track the expenses, and then it goes on to a document at the end of the year. Appropriate this time of year, right? Tax time is sneaking up on us very quickly. And April, I think 18th, if I'm not mistaken, is the cutoff date of sending in your money's due to the IRS, because I think the 15th is on a weekend or something. So that next business day. So it's coming. It's coming. All right. So what are we? The SBDC is a nonprofit organization. We provide confidential, no-cost advisory training and one-on-one consulting, which is really what I enjoy. We are funded by the SBA and the state of California through GoBiz. So you don't have to pay us anything. So all of our consulting services are at no charge. This is pretty cool. We've already paid. It's prepaid, put it that way. Here's our disclaimer. Of course, we have to, get the attorneys some time. So the information provided in the webinar and any supplementary materials provided to the registrants intended as educational, informational purposes only. Does not constitute professional, financial, and legal advice. No registrant should act or fail to act on the basis of material contained in the webinar without obtaining proper financial, legal, and professional advice specific to their situation. In other words, I'm not a CPA and I am not an attorney, okay? I have a lot of years of experience in the finance area and the credit area. So what I'm giving you is something we noticed during the last 2 years of CARES Act funding and the various funding conduits that came out of Washington, is that a lot of people had to send in certain documents to qualify for assistance, okay? Had to download these pieces of information. And a lot of people didn't know what they were, especially the small the small businesses, the little mom and pops. What's a Schedule C? Where does it, what number do I give them on the Schedule C? How do I track the funds for the Schedule C? What do I pay taxes on? Do I pay taxes on my gross sales? Do I pay taxes on my net profit? It was one of those eye-opening situations. So this class was invented specifically for the small, for-profit, small sole proprietorship. There's me, whole bunch of numbers there. If you add up the years, I think I'm 170. Anyway, basically what you're looking at is coming on almost 50 years in the credit industry. I was a banker for a long time, 25 years. I ran a small office of consumer credit counseling service. I was a housing counselor during the 2009 real estate crash. I've also been a HUD certified counselor, been teaching first-time homebuyer classes, and I love teaching. So that's basically it. I've also been an advisor for two organizations, Superior California Economic Development and the SBDC for the last 9 years. So you got at least a little background history, right? So, okay, so we've got to track, as a sole proprietor, we have to track income and expenses, okay? Very important piece of information that we've got to track. The first suggestion is to track it on an ongoing basis. If you can't do it daily as you get paid for your service or your products, you got to at least do it weekly, in my opinion, okay? Don't let it fall behind. The further behind you have in tracking it, the easier things get caught between the cracks, right? So tracking it on a daily basis, if you can't do it on a daily basis, at least weekly, will keep you kind of up to date on what's happening in your business. The other thing you'll see when you do this is you'll be able to tell how your business is doing much quicker, okay? You can say you're busy all day today, right? People coming in, people coming out. Yeah, you've had some sales. Yeah, you've had some looky-loos. But what did you really make today? What did you really make today? So knowing these things makes it highly important for you to have a successful ongoing business, okay? Also, it'll help you make adjustments as quickly as possible if you need to. Right now, during supply chain situations and inflation, if you don't make adjustments to price at this juncture, it could be too late. You wait a month or two, you could be underwater, okay? And can you actually have any money for yourself? Obviously, as a sole proprietor, the leftover funds on this situation is yours for the most part. It's what you live on, what you use, maybe what you pay the rent with, so at home. And so it's an important piece of knowing how much you will have at the end. It also assists in financial institutions and investors in making loans, okay? So it's hugely important that you have these up to date, especially if you need to expand or want to expand, want to go out and find some money somewhere along the line, go to your bank, financial institution. They're not only going to ask for tax returns, okay, and profit and loss statements for the last 2 years or 3 years, but they're going to want year-to-date figures. So if you're going in for a loan in April or May, you've got to have that 4 or 5 months in there so you can show them how you're doing now. Because as we progress into 2022, 2021 becomes a thing of the past further and further. You can't really make any more adjustments in 2021, right? So they're going to want to see not only the 2021 taxes and financials, 2020s and probably 2019s, the year before the pandemic. Reason being is 2019 was probably a representation of a more normal year. So if you had a real big drop in 20 and you started to come out in 21, maybe you're coming out a little more in 22. 19 will probably be, in many cases, your highest income and sales numbers for the last 4 years. So very important there. And how much do you have to pay in taxes is the last thing that you're going to need to know, because you pay tax to the IRS based on what we affectionately like to call in the banking industry the bottom line. You've heard that before, right? Bottom line. Bottom line is net profit, okay? How much is left over after all the expenses are deducted from your sales numbers or income, okay? Things to think about before setting up your books. We have a wonderful QuickBooks person, QuickBooks trainer. Her name is Rebecca. She is going to be teaching a new series of QuickBooks webinars this year for the entire Northern California area. She is a certified QuickBooks specialist. Cool. So if you're using QuickBooks, you have access through us at the SBDC to have a second opinion and to go through these trainings, which are fantastic. Okay, fantastic. Also, there's things on our YouTube channel that have already been taped. So we have QuickBooks. Obviously, that is a more detailed tracking of your income and expenses. Okay, it's a program either on a desktop where you have a CD to download, DVD to download, and you have it on your desktop, or you can have it in the cloud. They have an online version as well. Couple thoughts right now that I bring that up. I'll go ahead and bring it up now. If you're in the online where you're doing it in the stratosphere, all the documents and information that you put in there are saved, so that you can travel around and get to it fairly easily. If you use a desktop version and you only have it on your main laptop or computer, at the office or at home, make sure that daily you back that up someplace, okay? Either in cloud storage or thumb drive, whatever you want to do, something you can take with you when you leave the office. Okay, why is that? Well, I don't know about you where you're physically located, you guys, but I'll tell you what, we're in Northern California. And the fires have been exceptionally bad in the last 4 years up here. At least 4 years, okay? They've been really bad. And we have had, unfortunately, some very, very sad stories of people losing all their information on their computer because it burned to the ground and they didn't back it up, okay? So backing up your computers, either in, like I say, a cloud storage scenario or on some kind of a drive, and take it away from the office and the computer, have it with you. Hugely important to keep in mind. Now, you may not need QuickBooks. It just depends on how complex your bookkeeping is going to be. If you have vendors and invoices and you're billing and you're having money come in at different times of the month, or maybe it takes 45 days to get paid because you're dealing with a government entity or agency, got employees, yeah, QuickBooks probably the way, okay? Probably the way. But if you're by yourself, I'm the CFO, the CEO, the janitor, on my little business, it's just me, right? One guy. It's the real reason of, you should call a sole proprietor, right? I'm a sole proprietor, right? Technically, my business ceases to exist the minute I go up to see the big man, all right? And so you have to have some kind of tracking. Maybe you don't need QuickBooks. So we'll cover that in just a second. What forms of payments will be accepted? Of course, you're going to take credit cards. Most people do. Will sales be immediate, require delayed payment? That's called, shoot, senior moment. David, save me. Do you have that one? That's called payments due is called.
What are we talking about? Deferred sales or something?
Yeah, deferred payment when you bill out is called, accounts receivable. Thank you. It came to me.
Oh.
I guess getting old is crazy. Thanks, David. Accounts receivable. If you have accounts receivable, right? Money that's out there ways and you got to track to make sure you get paid. Okay. And do you need a bookkeeping software to start? And it costs money. QuickBooks costs money and you have to learn it. Okay. It's like any other software program. You have to learn how to use it. It's like Excel. It's like PowerPoint, which this is being made on today. So all these things you got to learn how to use. So QuickBooks is one of those you have to learn. Okay. Or you can use I used it for the first 5 years my business was open. Okay. A simple Excel spreadsheet. And again, you're going to be getting this copy of the item I'm about to show you when we're done. So I'm going to stop sharing this at the moment and see if I can pull this off. Share screen. Now let's see if I can find, there it is. There it is. Boom. Okay, so are we seeing it? Are we seeing the Excel spreadsheet at the moment?
Yeah, we are.
Okay, great. And let me shrink it a little. It's awfully big. Oops, now it's awfully small. There we go. So let's go ahead, and again, you'll be getting a copy of this. This is one that was, I think I found it, or we found it online somewhere. Okay. The reason it's cool is it's got all the sample formulas built into this Excel sheet. And you have the months of the year across the top, calendar year. In this particular case, we're running it as 2021. Okay. And as you put the numbers into these cells, okay, it automatically changes all your bottom line figures. Isn't that cool? Okay. So in this particular case, this is a small company that's making, a little over $1,000 a month, per se. They have a cost of goods for selling the product. So that's built into this scenario. Okay. What's cost of goods? If you're a retail seller and you buy these pens, okay, maybe you buy these pens for $1, all right, and then you sell them for $2. So your cost of goods would be the dollar you spent for the pen, right? That's cost of goods. Okay, so then your gross profit is the difference between the cost you paid for this pen and the amount you collected in sales for that pen, and obviously multiplied several times. Okay, so that's cost of goods. So you'll see up here in line 6, number 3, listed for ABC Company, gross profit. So if you sold $1,000 worth of pens and you only paid $200 to buy those pens wholesale, you made a gross profit of $800. Okay. Now you have other expenses, don't you? You don't just have the cost of goods, because you're probably have, obviously, if you have a storefront, you got rent. Okay. You got utilities. You may have probably have a telephone or telephone line, internet. Okay. You're going to pay insurance, fire, liability, theft to help you out in case something happens. Maybe you advertise a little bit. So you have some advertising expense. You have supplies, tape for your printers, your readers, your cash register. Okay. So you have supplies. And one of the ones that is often forgotten, but is a huge write-off, is travel. Okay, travel. If you are not capable as a sole proprietor, which most of us are not, to have a separate car or vehicle for our business, we probably use our personal car for business use. Okay, on the weekends, we might go up to the lake and play around, but during the week, we may be traveling around the community and using your own car. So how do you track that? What can you write off? Each year, there is a mileage per mile allowed by the IRS number. In this particular case, I used 56 cents per mile on line 21, and it's number 18 on the expense side. Okay. So as you can see here on 21, 56 cents per mile. Okay. So all you do is you track your mileage, and several people have already intimated to me that there is an app you can actually have on your phone. What isn't, right? What isn't an app? But you can have an app on phone that you can use to track this mileage and record it, keep it, okay, so that you can keep this number. Okay. The other way to do it, my wife's been doing it for over 25 years. She's a real estate agent. Well, guess what? She spends a lot of time on the road, doesn't she? She's traveling house to house. She's going out and setting the thing up. She's having open houses. She's taking people to look at the things. Boy, I'll tell you what, for her, And by the way, she operates her business out of the home office as well. We split the second bedroom in half. That's her biggest expense, is mileage. So she has a little calendar in her center console of the car, uses her tripometer B on her car, gets in the car in the morning before she leaves to start showing homes, writes down yesterday's mileage count in the B, clears it to 0, writes it on the calendar date in the book, puts the book back, and away she goes. Okay. And then I just add it up. Pretty simple. Okay. We add up the mileage we use for her business. I take the odometer reading at the end of the year, and the following December 31, I take the odometer reading again. Okay. So if we drove 10,000 miles that year and she had 8,000 of those miles for business, then 2,000 were obviously used for personal. See? And you have to split that off. You have to actually put that into the tax returns to take that deduction. But for her, it averages $8,000 to $9,000 a year on that 56, 57, 50, whatever it is. It'll probably go up in 22 because gas prices have gone up. It always fluctuates with gas prices and prices to get minor repairs. This covers the 56 cents a mile is supposed to cover wear and tear, tires, gas. That's basically what the calculation supposedly is. Okay. And it can be a huge write-off. So don't ever forget to have that category somewhere on your Excel sheet or QuickBooks. Okay. And then it adds up all the expenses. So you have total operating expenses on line 25. Remember, cost of goods has already been subtracted. Okay. So then in this particular case, in the month of January, you sold $1,000 worth of, let's say, the pens. Okay. You had all those expenses come out, you made 10 bucks, 10 and a quarter. Okay. Because all your expenses added up $789.75. So you get the idea, right? And then you move on to the next month. Okay. And then you made $1,200 in February at $240 on the cost of goods, same, maybe the same expenses. Maybe this particular case, there was no mileage deducted for February. Now you made $275 in that particular month. So as you can see, you can keep track of where you are by simply filling in your income and expense. And the bottom line, there it is, line 26, net profit. That's the one, okay? That's the number. At this particular point in time, without referring to the other schedule, which we'll see in a minute, basically you pay taxes on 029. 029. You'll pay taxes on $7,365.25. Okay. Calculate 15 to 20% of that minimum. And that'll give you an idea how much tax you need to pay. And you're supposed to pay that quarterly, by the way. So as the quarters come up, you can actually make a quarterly payment to the IRS for your business. And you can pull those off the IRS website, or if you have a bookkeeping service or accounting service, they can prepare the four of them for you. And you simply put them in the mail with the check, boom, off they go. And then you're prepaying your taxes during the year so you don't get the year-end penalty. Basically how it works. And again, you'll be getting a blank copy of this, so do not worry about, gee whiz, this is sure cool, but am I going to be able to get one? Yeah, you are. Okay. Looks like we've got some questions at this point, David. Do we have anything?
We do. Let's see here. Okay, let me get rid of something here. Okay, there. Now I can see stuff. Okay, couple of things. Spring mentions that to track miles, you can also use Google Maps into your starting point where you're going. And there's a couple of, Lisa mentioned Mile IQ. That is another good app. I've also heard of Hurdle and TripLog. Anyway, you can Google that and Google mileage. apps and find us. Let's see, the first question, from home office setup, can you include utilities of the home?
And this is where originally we had two Joes teaching this class. Joe Dorco was the other one, so it was the Double Joe show, okay? And Joe was our accounting specialist in this particular format, so he'd have a better answer for that. But yes, there is a way to do it. I exactly do not know how, okay? But there's a percentage of the utilities. You can take a percentage of your house payment also, but there's some technicalities you got to go through to do that. So you're absolutely correct. You can write off the square footage of your at-home office. Check with your accountant, CPA. That's the easiest way for us to get around that particular, but you're right.
Yeah, it's based on the square footage you use for your business compared with the actual square footage of your house. And there's also a standard rate that you have the option to use with the IRS that kind of standardizes it and makes it easier. But it is best to check that out as you go. And Spring is asking, what was that percentage again?
Oh, for the tax? Must be for the tax. Yeah, maybe it was the tax. Yeah, the percentage I did bring up was how much of that $7,000 you should save for taxes. 15 to 20% is a good starting point to do your quarterlies, your quarterly pay. So 20% is a nice round number. So take 20% of whatever that is, and that'll be your quarterly pay to the IRS. That way you stay ahead of that curve, because there is a penalty at the end of the year if you don't pay. I think it's, I don't know. I think, again, we have disclaimer. I think it's 75%. You don't pay around 75% or more of your taxes during the actual calendar year, you get a fine. It's wonderful. No, it isn't. So make sure to pay your quarterlies and pay it ahead of time so you don't get that extra fine, so to speak, at the end of the year.
And then it says, somebody's asking, what was the form number that you mentioned?
Schedule C was the form number that I've mentioned so far. We're about to see what that thing is, by the way. And you'll get a copy of that Schedule C as well. This is just an Excel spreadsheet that, was made to track easy income and expenses along the way. And like I said, I used this thing for 10, 11 years myself. And one I got on the internet someplace. Yeah, really cool tracking. And you can change the names easy, right? So you may not have all these categories. You'll notice you got tax and license. There's only 1 month here in June that you have like a $50 expense in tax and license. And that's when maybe your business license renews, right? So here in the Reading area, for me, it's $50 to renew my business license. So when the month that it happens, I have that expense. See? So yeah. And you can change the names on this, you can, it's really easy. The thing obviously to avoid is don't touch the ones with formulas in it. And you'll be able to see what a formula is. Let's see, I'll show you one there. So you can see this is the sum of D7 to D27. So it adds up subtracts up all the items. You see what I'm saying? So that's a formula in number 28. But don't touch a formula. Formulas are supposed to automatically fill when you put in all the expenses and all the income. So pretty cool.
Then one other question, what if you're not profitable yet?
It's okay, you can show a loss. You can show a loss. Several people that I actually worked with in 2020, unfortunately, because of the COVID shutdowns, had to show a negative profit and loss at the end of the year. So obviously then you don't pay any tax, all right? There's no tax then on a negative number. You can only run a negative number for a certain number of years before things get fishy, all right? I do not know that number. Again, check with your tax person, check the IRS website, check with the CPA. Aunt Millie, if they used to do books, they'll know that answer, but you can only run a negative for a certain number of years before they get a little feisty at the IRS. But sure, you can show a negative. Yeah, you can definitely do that.
Spring is asking one more. Can you share some identifications to know when you can do this yourself and when a professional is needed?
Really, I guess it depends on, your technical capability. Are you a numbers person? I'm a numbers person. I've used one of the tax programs online before. They're doable, not a problem. If you use like TurboTax or one of those tax programs online, they'll actually walk you through this Schedule C I'm about to show you and ask the questions, okay? So you say, yes, I have a business, okay, and then they'll say, all right, what were your sales in 2021? Okay, what were your cost of goods for those, things you sold? You put that in there. And then they'll ask, what's your rent? What's your utilities? They'll actually ask the questions and fill in the Schedule C as you answer the questions on the TurboTax online, okay? So you can do it, you can. When I started making, over say 25, 30, 40, $50,000 in gross income, had a bunch of categories with a bunch of questions. That's when I got a bookkeeping person to check my tax at the end of the year. Pay them $100, let them fix, check it out. So there's no real rule of thumb. It's just how technical, number savvy are you, and do you want to use one of those programs to do your taxes? Can be done. My daughter's done it every year. She has a small side business. She's a school teacher, and she has a thing that she does at night. And she's done it on TurboTax herself every year. So the cool thing about a tax organization is they may have something that you forgot to remind you about that you might be able to deduct, or there might be something else that you forgot to do in the other standard deduction area as well that we don't have, we're not privy to. So again, just a thought. You have HR block too, so yeah.
For Renee is saying for quarterly tax reporting isn't needed until you owe tax at the end of the year, I believe. So in other words, if you have a loss, quarterly tax reporting, isn't necessary.
That is correct. If you have losses along the year.
And she's also saying that she thinks it's 3 years for the negative.
3?
In a row.
Thank you. Thank you very much.
That's all I see at the moment. I hope I'm not, if I'm forgetting somebody, feel free to send me an instant message or a direct message and tell me I'm a moron. Happy to help.
And some of these questions too, we will answer after the fact. We'll make sure that we copy these down so we can maybe answer them direct as part of the final situation, but we'll try to get to them all. Stop sharing this now. Go back, I think, to this screen. That didn't work, I don't believe. So I stopped sharing that one, so. Oh, there, is that up now, my PowerPoint again?
Nope, I still see you.
Just see me.
There we go. You're up.
It's back up? Okay. There's a lag. So there's the simple spreadsheet we were talking about, okay? Fairly easy to use tax form to reporting profits to the IRS. Here's the Schedule C, okay? So here you filled out this Excel sheet, right? So you've got the numbers. You do this all during the year, okay? Year end, what do you do? So here is what we do. Stop sharing, go here. Find my, hopefully now the Schedule C is up on the board.
It is, looks good.
Cool. Let's see if I can shrink that down a little bit because it's a little bit large. Just trying to remember how to shrink that. We'll be good. I'll just move my face out of the way. All right, so this is the official form, everybody. This is the profit and loss for business, good old Schedule C. And this is the item that was quite often the nemesis in applying for any of the disaster loan funding. that we spent days and weeks and months trying to help people to get the funds from the federal government and state out of the CARES Act funds and the other funding programs. So knowing what the Schedule C is as a sole proprietor is hugely important. If you have your taxes done by someone, definitely verify yourself when you have this schedule prepared that the numbers are accurate and everything is kosher, all right? But you can fill it out yourself. If you use TurboTax, they'll fill this out for you. So you have the name of the proprietor at the top, principal, business, or profession, okay? Business name, in this particular case, it was ABC Company, okay? Most of us as sole proprietors use social security numbers, so you would use your own social security number there, okay? If you have a tax ID, obviously you have an employer ID number, you put it there, okay? Ask some questions, okay? Did you use the cash method, accrual method, or other? Most sole proprietors use the cash method. In other words, you get paid, the money goes in the bank, you spend it. That's cash, okay? Accrual basis gets a little more technical. Again, most of us as sole props will probably not use that. And maybe you want to use QuickBooks or a tax person to assist at that time, okay? Did you make any this was the 2019 Schedule C, as you see the top number, that's 2019 C. So it asked the question here on I, did you make any payments? That's your quarterlies, okay? So again, you just ask some questions and then you're transferring the information from your Excel sheet in this case over to the Schedule C. So 19.7 was gross sales for the entire year of 2019 off your Excel sheet. 3,940 was the cost of goods. There's your gross profit number. 15,760 should match your other Excel sheet. All your expenses come out, okay, right in here, fit into certain categories. That total then comes to 8,395 on line 28. Tentative profit on 29 is then that 7,365. That was the same number in the bottom right corner of your Excel sheet. Then, of course, it asks, do you have any other deductions, blah, blah, blah. So normally line 29 on a sole proprietorship jumps right down to line 31. Line 31 was the magic number that we were able to use for the funding programs available through the disaster SBA program during COVID. And a lot of people didn't know what line 31 was. And that's what brought us to this class, okay? Was to let everybody realize that that is the magic number for several things. One, that's how much you made for the year, net. Two, that's what you pay taxes on and self-employment tax, okay? And three, that's the number that was used for all this funding that was coming out of the federal government and state. So it's hugely important for you to identify this line, okay? That's the one that could be negative. If it's negative, that means you took a loss, okay? No tax is due on a loss, okay? If by some crazy reason you made money and paid quarterlies ahead of time, and your year-end number on line 31 ends up to be negative, and this was your only income, okay? Technically, you'll get a refund for all that money you prepaid. See where I'm going with that? That would be then a net refund because you thought you were making money. All of a sudden, for fourth quarter or third quarter, you took a dive for whatever reason, okay? And you ended up with a negative figure after you paid quarterlies. You'd actually get that back as a refund. Just like anything else, if you overpay taxes and you have a payroll, right? If you overpay taxes, you do your itemization of itemized deductions, and you paid $7,000 during the year out of your W-2 on your tax, on your income. Okay, so let's say you paid 7, you do the tax return, you only owe 5, guess what? You get $2,000 back, that's a refund, right? So that's how it just works similar. If you overpaid your tax liability, you'd get a refund. You'd get a refund. Then, you have to report what cost of goods are, so forth. There's vehicle information about mileage and so forth. But that's the Schedule C, okay? And again, if you use a TurboTax online tax service, or you go to somebody, that's where they'll transfer that information from your Excel sheet or your QuickBooks P&L. If you use QuickBooks or a bookkeeping program, QuickBooks isn't the only one. It's just the most often used, okay? And that's where you get the numbers for this profit and loss business Schedule C, right there. Okay, hopefully I stopped sharing again on that.
You did. We have a few questions here.
Good timing for that too.
And yeah, okay, here we go. Frank had asked, I'll just go through it just to be sure. I'm an LLC, first time filing taxes with a business ownership. Should I file personal 1040 and separate business tax? If so, what's the form for the business tax? I responded, maybe you want to add to this if you want, Joe, but if you're a single member LLC, the IRS considers it a disregarded entity, which means you'll file a 1040 Schedule C form as a disregarded entity. But if you have multiple members of the LLC, it's probably going to be considered similar to a partnership, and you'd have to file a 1065.
Amen, brother. That's above my pay grade of knowledge, so you know more about that than I do. So thank you, David. That's great.
Well, here's one that is in your wheelhouse and not mine. Pamela is asking, when does the bank take into consideration when getting a loan, gross or net?
It's the net number is what they use. They do something. We have the YouTube channel we're going to bring up to you at the end of this presentation, by the way, has a wonderful class on borrowing money, okay, and how it's used. So they do ratios, okay. It's a ratio class. It's understanding financial statements, by the way. And what they do is calculate ratios, but obviously the bottom line, that net profit, is a number that they really like to hang their hat on. I'll give you an idea. I was a bank manager and lender for, as you know, 25 years. And, my client would come in and say, hey, Joe, I had a heck year. I sold $1 million worth of stuff. I say, hey, congratulations. Now, what did you make? Nothing. And then I said, well, you're coming in to borrow money for a new piece of machinery. You got nothing left. How are you going to make the payment? So you got to be really careful about writing everything off. Because a lot of people want to, I understand. You want to do that. Write off as much as possible so you don't owe the IRS anything. The problem with that is, if you don't have anything left and you want to buy another piece of equipment, or you want to do this, you want to buy a building, whatever, you got to prove you got the extra money to do that. See? So that's an important piece of the puzzle, to make sure that that net profit shows something. You'd hate to, unfortunately, show negative. Right now, we're having situations where in 2020, because of the COVID situation, people lost money, right? We had just talked about that. So banks are going, well, look, you lost money. Well, they said that that was an unusual scenario. So what they do then is go back to, hopefully the business has been around a while, they'll go back to 17, 18, 19 and get a 3-year history of normalcy to see what it was before this thing hit. See? To give them an idea of where they were, and then try to interpolate where you're going to be coming out of this thing. So, yeah. And the other thing that's very interesting, and my wife and I have faced this several times, when my wife has a good year in real estate, makes a lot of money, I cringe. The reason being is because I know we're going to have a big tax burden that particular year. And guess what the biggest tax is for a self-employed sole proprietor? It's not the IRS debt. It's your Social Security, otherwise known as self-employment tax. Because you're paying your 100% of your own Social Security that's due as a percentage. And 90% of the time, that tax, your self-employment tax, is higher than the IRS debt. Not wild. So again, tracking expenses using for profit and loss statement software, using profit and loss statement, prepare Schedule C. We're good. Income, taxable income is as defined by us. This was prepared by our other Joe. Gross income is income from whatever source derived, including but not limited to compensation for service, including fees, commissions, fringe benefits, and similar items. All revenue, cash received from an exchange of a product. Theoretically, you're supposed to do that. So if you barter with somebody, technically you're supposed to report that. Sales revenue minus allowable expenses is taxable income. We've already talked about that. Business expense, items that are both ordinary and necessary. Ordinary expense is one that is common in the industry. Some of the industries have common expense, okay? That, you know, if I'm mowing lawns and doing landscape maintenance, it's going to be different than if I am offering services doing taxes for people, okay? It's a different animal. So you're going to have certain types of things that vary based on industry, okay? Again, tracking expenses, you use software. You can use the easily, track. There's apps available to track expenses, okay? Well, there's Excel sheet that I showed you, okay? Technology, you can use your cell phone, right? I'm amazed. Of course, nowadays they'll charge $1,000, $1,500 for these cell phones. And you go, why? Well, because they're computers. They got more power than the original Apple that we had on our desk that weighed 1,000 pounds back 25 years ago.
Well, we have a couple more questions. You ready for a couple more?
Sure, shoot them at me.
On this form, do you include the taxes you have prepaid?
Yeah, that's one of those questions at the top of the page. It says, have you made payments? Yes.
All right. Yes. I do some contract work through my business and get a 1099. Would that go on the Schedule C?
That's normally, yes, one of the items that goes on the Schedule C, correct.
Okay. If you've been making draws monthly and that line 31 is negative, do you still avoid paying taxes?
Technically, if you made draws, it's got to show up as income on your personal side, I would believe.
Yeah.
You'll never get out of it. You'll never get out of paying taxes on money you get.
Yeah, great idea, but it doesn't work.
All right.
Yeah. Renee says, I'm not sure when she said this, I'm sorry, but she says, great point. It also affects your future SSA income.
Exactly. Yes. One of the things my wife complains about to this day is that as a self-employed real estate agent, there's a difference in the amount of money accumulated if you don't report it correctly on your Social Security. So as you deduct expenses to lower the liability of the taxes, it can affect your Social Security check. So it's another catch-22, right? Because if you're not paying enough self-employment tax while you're working, it's going to affect your check at the end of the deal. The other thing you want to make sure to do, and this is, I don't think brought up on here anywhere, is please get a retirement fund going. Okay. There's several options and several programs available, but make sure that you set up a retirement fund, even if you're self-employed. It comes off the income tax for one. It's non-taxable income, which is cool. It's stored for future use. There's a lot of positives there, well, I'll tell you that. Now I understand you can even use crypto. I don't understand crypto, but there you go. So I'm trying to be hip for an old guy.
What's the equivalent of Schedule C for state taxes? For California, it's CA on 540, but I don't know about other states. Do you know anything
No, I
different?
don't. That
Yeah.
is correct. I don't know in other states either.
And then I apologize, I missed this one, but we're not going to be able to answer it anyway. But I'll let them know. What is the process for registration of a sole proprietor in Canada, Ontario? Well, I am here, international student, type of bank account. Yeah, that's just we're in the
Yeah,
United States. We're based in Northern California. We have no I don't have an idea of what
I
the
don't either.
requirements would be there.
It's unfortunately out of my knowledge. Cost of goods sold, again, is the direct cost of your products. If you're a service person, here's another one that came up during all of this. If you offer a service, like I do, I teach classes, I help people with credit repair. Services don't have cost of goods for the most part at all. We have no cost of goods. And that was one of the requested items on the reports that you had to do for some of these loans was, what is your cost of goods? And they were people panicked, and understandably so. And the answer is zero. So an indirect cost, again, can be attributed to the product. Obviously, you got rent, office, equipment, utilities. That's all your other expenses. Okay, indirect, they call them. Sometimes you can write off lunch, food, gifts, entertainment, depreciation. Gets a little bit more technical at that point. QuickBooks would then be a viable option when you start getting into a more detail. You got employees, for instance. It's time to get a bookkeeping program. Okay. And this was Joe's funny. Non-deductible expenses, bribes, lobbying costs, penalties and fines, political contributions. So that was our ha-ha moment.
We have another question about rental income. It says rental income can consider as income. She has Social Security income and cannot make more than $20,000 a year. I know rental income is usually it's going to be reported on a separate schedule, Schedule E, I think.
Yeah, I think so too.
I'm not sure. Yeah, is that right, Schedule E?
So, I believe that's right. Yeah, that sounds familiar.
But yeah, it's considered income. So
correct.
It says,
and again, maximize your. Go ahead.
Nancy says to the question regarding Canada business entity registration, start with the local city or ward. So there you go. Good. Thank you, Nancy.
Good deal. To take advantage of any business tax credits, there are some available for those of you with employees. There's a tax credit available for 21. Check with your accountant and CPA about the available tax credits due to COVID. All right. And find out what's available. It can be very helpful for those of you with employees. And look, obviously, for ways to defer taxes, setting up a retirement plan, no doubt. Okay. Track your expenses, software, phone apps, run profit and loss at least monthly. I say weekly. Do it weekly. Okay. Pay your taxes obviously on time. Pay quarterlies. Saves you that year-end penalty. Sit down with your tax specialist a few times a year to look at strategies and ways to help. And remember, making money is easy. Keeping it is the challenge. And that's true. It's a true statement. Plan on paying quarterly taxes, estimate your tax liability, pay your employer portion, and pay all sales taxes on time. Don't forget sales tax. If you are a state of California retailer, you got to collect sales tax. I think it's still 7 1/4. It's a lot. Isn't it so still? Yeah, 7 1/4. Some areas are higher. You may have a local city tax. So some are 7 1/2. I've seen taxes in California up to 8. As you make sure you collect it, make sure you send it in. State of California gets feisty as well. Okay. Any final questions?
I don't see anything. I think we pretty much got it all. Again, a reminder, We'll be sending copies of the slides, copies of the Excel file and the Schedule C, and a link to the video. There is one more. My HR company does quarterlies. Should they do the Schedule C?
I didn't hear the first part of that question.
My HR company does my quarterlies. Should they do the Schedule C?
Well, if you're a sole prop at year end, it would probably transfer to a Schedule C, yes.
He said he's going to ask them, so.
Yeah, I would ask, yeah, for sure.
Yeah.
It's worth the question to ask for sure. And again, here we are, Shasta-Cascade SBDC. We're right here downtown Reading. A lot of you seem to be calling in from other areas of the country. Congratulations and thank you. Remember, SBDC is everywhere. We have SBDC offices throughout the United States. There's more Joes and Davids out there. How about that? Of course, we're the only ones. You know what I'm saying? But there's a lot of us out there to help. So don't, look it up on your internet, right? Google it, find your local SBDC office. And we all offer our services again at no cost. It's prepaid. There's our Facebook page. We have Twitter, we have LinkedIn, and there's our wonderful YouTube channel.
Yeah. Actually, we're not seeing it, Joe.
Oh, did it fall off?
Yeah,
Uh-oh.
we're seeing your face, but
that's ugly.
There we go.
Is it back?
It's back. Okay.
Okay. Yeah, so there's our address here in Reading and our contact phone numbers for those of you who are in the Reading area. And again, every county and every state is covered by an SBDC office. So we're here to help. Any final questions? And we, I think, have exhausted our hour.
You have nothing else.
Very good.
There
Well,
is
thank
gonna
you
be-
all.
let me
We're gonna send
do
out
six. Yeah, we don't have it.
yeah. So
So
we'll
what
send
we're
out-
gonna do,
Yeah.
is we're gonna send a link to a survey for you to give feedback and tell Joe how wonderful he is or how much he was horrible. And believe us, we've got thick skin, we can take it. But the reason for it is to help us improve and to find out what subjects you'd be interested in hearing from us about, some suggestions. So we'd appreciate it if you'd take the time and click on that link. I apologize, I don't have it for you right here to give you right now, but we will be sending it in the email.
Very good. Well, thank you all for joining and congratulations on your business. Hopefully it's recovering nicely or growing nicely, and tax time, unfortunately, is just around the corner. Oh my gosh. So we'll be ready, right? You'll be ready. Take care.